What's good, y'all? Welcome back to day 23, I believe it is. I'm excited for today because I just spent the last maybe 15 minutes becoming fucking Picasso. So, today we are going to incorporate what we learned yesterday regarding AMD, and we are going to also combine it with open low high close and open high low close. So, yeah, without further ado, let's get right into it. Let me get my big head out the way. All right, so what is essentially open high low close and open low high close? Well, it's just the way each and every single candle moves, right? So starting with a bearish candle, no matter what time frame it is, what do we have? Well, we have an open, right? Candle opens, a manipulates higher, right? Open high, puts in the high of the candle, and then what do? We distribute lower, putting in the low, and then we close. So it's literally that simple. That is open high, right? We open. Oh, fuck. Hold on. There we go. Okay. We open. We manipulate higher, putting in the high of the candle. We come all the way down, put in the low, right? When we distribute, we put in the low, and then we finally retrace just a little bit and close. Now, I understand some candles will close like this. They won't put a wick in, but in this scenario, we're just going to focus on this, right? And then same thing with a bullish example, right? We open low. Let me get my thing out there. We open low, high close. Again, same thing, just going the other way, right? So bullish candle, what do we have? We have the opening price. What do? We manipulate lower, putting in the low of the candle. And then we distribute higher, putting in the high. And then we retrace just a little bit, closing. So there is our bearish and bullish examples. Again, one more time. Price opens, manipulate higher, distributes lower, then closes. Exactly right here, right? Open, high, low, close. And then same thing with our bullish. Price opens, manipulates lower, distributes higher, and then closes. Price opens, manipulates lower, putting in the low of the candle or the skid mark or the wick, and then distributes higher, putting in the high, and then retraces just a little bit, closing. So now that we got the basics of open high, low close, and open low high close, let's go down here. So the way I like to use AMD and open low high close, open high low close is with the 10 a.m. candle, right? So what do we know about the 945 candle? Well, it starts to chop a little bit, right? And we'll get into that. But essentially, let's say we're bullish, right? If we're bullish and we see price chopping around at like 945, right? Say this is 945. What do we want to see at 10 a.m.? Now, 10 a.m. is a start to a new 4-hour candle and also a start to a new 1-hour candle. So this is why I look at it at 10 o'clock, right? So if I'm trying to long the market and 10 a.m. comes, what do I want to see from 10 a.m.? Well, I want to see an open low, high close, right? So after we're done accumulating, we manipulate lower, putting in the low, and then we distribute higher, putting the high, and then we finally close, just like this. And then same thing if I'm going short, right? If I'm going short, I want to see the 10 a.m. candle open up, open high into a possible fair value gap and whatnot. And then I want to see distribution lower, and then we can catch an entry somewhere in this general area, right? So this is what the actual 4-hour candle will look like. And then these drawings with the blue, red, and green will act as if like the lower time frames, right? So say this is like the 1 through 5 minute. This is what the 1 through 5 minute would look like, or this is where the 4-hour candle would look like. So pretty freaking simple. Without further ado, let's get into our last drawing. I feel like this isn't really a tough subject to grasp, right? We accumulate, we manipulate, we distribute. Bearish example, we accumulate, we manipulate higher, distribute lower. Bullish example, we accumulate, manipulate lower, distribute higher, right? Pretty freaking simple. So moving on to the 945 price action that I was just saying. So this is the way I like to incorporate it, right? So again, around 945-ish, 947 each morning. Now it doesn't happen every single morning, right? But a majority of the time, I would say about 3 to 4 times out the week, especially if price action is good, around 945 to 947 is price will start to move like this, what these blue boxes are looking like. So we'll start to accumulate. So now say our bias on the day or our draw on liquidity for the day is lower and price is accumulating at 945 all the way up until 10 o'clock. Well, if I'm trying to short the market, what do I want to see at 10 a.m., right? Remember, the 10 a.m. is a new 1-hour candle along with a new 15-minute candle, a new 5-minute candle, a new 4-hour candle, but mostly we're just going to focus on the 1 hour and 4 hour, right? Because those are the higher time frames. So what do we want to see? Well, we want to see the wicks put in, the high put in of that candle, and then we want to catch the distribution. So we accumulate, and then let's say we manipulate. When we manipulate at 10 o'clock though, what I really look for is us manipulating into a fair value gap. So I don't care if it's a 5-minute, a 15-minute, and a 4-hour, a 1 hour, a daily. I want to see a manipulation into a fair value gap. Now, I prefer it to be a 15-minute or higher, but if all we have is a 5-minute, then sure, we can use that as well. Right? So say we have a 15-minute and 1 hour unfilled fair value gap above us, and we're accumulating and we want to short the market. So when we're accumulating, what comes next? Well, there's the A, and then what's next? The M. So I want to see a manipulation into this bearish fair value gap, and then possibly see like an inversion out of it, and enter and catch this entire distribution leg down. So our entry point would look something like this, right? Stops at the highs inside the fair value gap. We already know that. And then we can catch the entire distribution leg down, right? So what happens at 10 a.m., which is this dotted line? Price opened high, put in the high of the wick, and then closed low. And then same thing with our bully example. I don't know why I just did that. Right? 10 a.m. candle example and 9:45 price action. So 9:45 price action. Again, 9:45 to 9:47, that's when it starts to happen. You'll start to see chop. Again, not every day, but it'll happen most of the time. So what do? We start chopping around a little bit. What happens at 10 a.m.? Well, if we want to go long, what do we want to see? We want to see an open low, high close. So when we manipulate lower, what do we manipulate into? Not only do we sweep out all this accumulation zone lows, but we also manipulated into a 15-minute/1 hour fair value gap again. And again, this can be a 5-minute, it can be an hourly, it can be a 15-minute, it can be a daily, it can be a 4 hour. Doesn't matter. Again, I like to see 15 minutes or above, but again, it really doesn't matter. So when we manipulate lower at 10 a.m., what are we doing? Well, we're putting in the low for the 10 a.m. candle, right? This is what it would look like. Here's the low for the 10 a.m. candle. And then what are we doing after that? Well, maybe we have an inversion somewhere in here. Maybe we have a break of structure, CISD, whatever. And then there is the distribution. So here comes the distribution right after that. And I want to catch an entry somewhere in this relative area right here. So we can go ahead again and catch the distribution leg for the next 30 minutes or so, right? Until we have another fucking whatever, draw on liquidity that gets hit, we're out the trade, right? It's that simple. So I hope this makes sense. I want you guys here, let me move my head out the way. I want you guys to write this down, right? Draw this in your notebook. Here is 9:45 price action. Pause this video. I'm going to move up. Here is the 4-hour candles, right? So these candles are the 4-hour, and this is what price looks like on the lower time frames. Essentially accumulating, manipulate, distribute, right? And then up here is just the basic definition of open, low, high close, and open, high, low close. So take a screenshot of this, write all this stuff down. And without further ado, let's jump right into the markets. And let me get my big ass head back on here so I can show you guys examples. So, okay, so we're just going to go through last week and see if it happened throughout all the days. I'll show you guys literally Monday through Friday. Let's start off on Friday, okay? So what do we have here? Again, around 9:49-ish, what do we start doing? Well, we start accumulating. Okay, here's our accumulation zone. Oh my god, I need to get the fucking... Okay, here is our accumulation zone. What do we then manipulate into? Well, all the way to the left of us, you guys can't see it because it's all the way up there, but we ended up sweeping out previous week lows, I believe it was. So, that being said, this is now our manipulation move, okay? So now we have accumulation, a manipulation, right? What do we end up doing? We end up going higher and higher and higher, right? So again, classic AMD. And look what time it is when it's happening. 9:49, we're accumulating. What do? When we manipulate lower, take out all these lows right here. We sweep out. We actually just swept it out. So it was like right here when we took it out. Previous week lows. We swept out previous week lows. And then what did we end up doing? We ended up distributing higher. Okay, so there is example number 1. Now let's go to Thursday. Let's see if it did a Thursday. I don't even know if it did a Thursday, but let's go and check it out. Okay, so again, here is what Thursday looks like. And I'm glad it looks like this because, again, it's not going to be perfect every single time. So what do? Well, around like 9:40ish, we're kind of chopping up just a little bit, right? 9:53 comes around, we start accumulating, okay? What happens at 10? Well, 10's just chopping a little bit. We don't really manipulate into anything, right? But let's say 10 opens... 10 a.m. opens at this black line right here. So what do? This is all essentially our manipulation leg. And then this is going to be our distribution leg, right? Why? Because what does this black line represent? Well, that's 10 a.m. open. What do? We open high and we end up closing low. But we didn't really manipulate into anything this time, right? Because there is a... Well, we're inside of a 5-minute fair value gap, but we were already inside of that fair value gap. So it's not like we accumulated and then manipulated into it. No, we are already in there. And then what do we do with the 15-minute? Well, we left this 15-minute untouched. So this would be an example of, yes, it still happens, right? 10 a.m. opens, we opened high, and we ended up closing lower. But we didn't see a valid manipulation point to help us and use it as a confluence in this situation, right? And did we get an SMT as well with these internal highs maybe? No SMT either. So on Thursday, obviously, yes, we still opened high and we went lower, and that was our draw on liquidity for the day, was a bearish draw. But we wouldn't really be able to incorporate it. So here's a live example of Wednesday, right? Again, around like 9:48-ish. What I've been saying, 9:45, 9:47 is when it happens. On 9:48, we start to chop, right? Again, we're still chopping once 10 a.m. comes. Here is all of essentially our accumulation zone, right? Well, what do we end up doing? Do we actually end up sweeping out these lows? Nope, we actually created equal lows. So again, Wednesday, we wouldn't be able to incorporate this in our strategy. And honestly, I wouldn't suggest trading this price action anyway. This is just terrible, right? 10 a.m. opens, we don't really make a manipulation leg. We just essentially just trend higher, but we're not even trending higher. We're still like accumulating right here, and then don't really do much for this entire day on Wednesday, right? So again, it's not going to happen every single time, but when it does happen, it's good to know, right? It's good to anticipate. So if you start seeing 947 start accumulating, and price is moving, has been moving pretty good for that day, you can assume, all right, if we're bearish, I want to see this, right? And you can start coming up with A+ scenarios in your head, so when they present themselves, well, you're already prepared. All right, so with that being said, let's go on over to Tuesday. All right, so here's Tuesday. Again, not one of the best examples, but I'm glad this is coming up because this is real price action right here. I don't just want to cherry pick these examples. I want you guys to actually incorporate it with like real-time movement, right? So again, what do we end up getting? Well, around 9:51, we end up getting this accumulation zone right here. Okay, all this general area is just essentially accumulation. Well, what do we actually end up doing? At 10 a.m., we ended up manipulating lower, taking out that manipulation or that accumulation zone lows. But how did price end up moving? Literally just sideways for the rest of the session, right? So again, this would be another example of just a no trade day because you don't want to be trading this, right? This is what the 1-minute chart looks like. This looks like absolute shit. Like, I don't want to be into a trade during this. So again, now Tuesday, Wednesday, Thursday, and Friday are done. The only time it really happened this past week was Friday. But Friday was a great example. And then I also like to show you guys Tuesday, Wednesday, and Thursday because, again, it doesn't happen every single time. I just want you guys to get it engraved in your brain so when it does happen, we can use it as another confluence. Again, Monday, just off rip. We don't want to be trading this, right? So this past week wasn't really the best for open, high, low, close, open, low, high, close with that 10 a.m. candle. But that's completely all right, right? Because, again, it's not going to happen every single fucking time. So what do we end up doing at 10 a.m.? Well, 10 a.m. opens. What do? We just fucking go sideways. And then price manipulates lower, taking out all this LRL right here. Again, if you guys don't know what LRL is, go watch the liquidity video and the liquidity sweeps video. Took out all this LRL and then didn't reverse, didn't do anything. It just continued to go sideways. So again, that would, again, be another no trade day because why would we be in the market when that shit is presenting itself like that? I don't want to trade that. And if I am going to trade that day, I'm going to be trading the PM. All right. So that being said, that's all for the open, low, high close, open, high, low close examples. Okay. I wanted not only to just not cherry pick these examples, I want to show you guys what it actually looks like on a day-to-day basis. Because again, for the last time, it's not going to happen every single time, but when the opportunity does present itself, it's good to know because you can capitalize off of it. So that is another confluence, I guess you can call it a confluence, that I use on a day-to-day basis, especially when price is moving good, right? Okay, so that being said, I hope you guys learned something. It's a pretty solid video. Again, pretty quick video. Thank you guys for watching. Go follow all my socials at LoeGpa. All the links are in the description. Free Discord in the description as well. I live trade in there every single morning, Monday through Friday at 9:30. All right, so y'all boys have a great night. I will see you tomorrow for day 24.